A few listeners said to me, "It's all well and good you've been lucky to pick a few multi-baggers and share them with us. Okay, but what about your mistakes?" That's an excellent point. So this video will be a list of some of my investment errors, why I made them, what I learned, and where it helped me later. I'll go over 6 mistakes in some detail, so this clip will be longer than usual. My pain will be bigger than yours. To make it easier, I divided my mistakes into 4 kinds. First kind is errors of omission, not doing something I should have done. Number 2, errors of commission, doing something I shouldn't have. Number 3, errors due to laziness, when I cut corners instead of doing the actual sleuthing. Finally, errors of stupidity, when I was more stupid than I had the right to be. Of course, many errors had more than one component. Some had all 4. Here goes. First mistake. One of my most memorable errors years ago was to pick Silicon Graphics, SGI symbol then. It made fancy chips and circuits for flight simulators, both military and civilian. It was at the very top of the market of such devices. What's better, there was a wave of insider buying of the stock, and customers were singing the product praises. I talked to a few, and the CEO, one Mr. Bishop, was seen as the second coming of Elvis or Steve Jobs in the Bay Area. Take your pick. When I went to visit the place in Santa Clara finally, I saw all employees riding around on yellow bikes with the company emblem, and there was not one word against management. Meantime, I bought some stock and kept trying to find negative views. There were none, until finally I got one from an old customer of the company. He said the product was so good and the market so hot that other companies were entering to supply part of the needs. Apple and IBM, for example, had simpler devices that stole some features from SDI, but the lower price, and they kept stealing more and more features. So SGI had to spend more and more on R&D for even fancier features just to stay on top. These extra spendings and lower margins meant that even as the customer was singing praises, SGI's profit growth tapered off, as did margins. Now you may ask, why did the employees buy the stock? Didn't they know this? The answer is, some did, but not many. Such strategic problems are not always grasped by the rank and file. Also, the employees were mesmerized by the magnetic boss, who himself was buying stock. Finally, though, SGI lost some contracts to IBM, and the stock began to melt, and I finally sold in shame at half the price I bought. What did I learn? 4 things. First, insiders buying is not always a surefire signal. Second, happy customers and mesmerized employees are not a sure signal either. Third, some companies do too many favors to customers for which they cannot be paid, especially people at the top of the food chain being squeezed constantly from below. But fourth, instead of just selling my stock, I should have stalled and gone short. I mean, if I've been ashamed of having been a fool, at least let the fool make some money. After all, the shame would fade, but the money would last. Now, what's the relevance for today? NVIDIA may be in a similar boat as Silicon Graphics then. I'm saying may. Why? Because NVIDIA is at the very top of AI chips market, and it keeps spending to stay there, even as some competitors begin to nibble at its heels. That's the main reason, by the way, I have never even considered investing in NVIDIA. Yes, I missed a lot, which you can consider another error, but so be it. You can't win them all. For me, SGI was like a childhood trauma. Once you are hurt by fire, you are always wary of it, which is why I was wary of NVIDIA. So that's one error. One of stupidity on my part, and perhaps laziness for not seeking out more negative views earlier to counterbalance my bullishness. Second mistake, Fossil. The watchmaker, FOSL symbol. The stock came up as cheap on some of my screen, so I talked to accessory shop that sell watches both in America and in Europe when I was on a vacation in Italy, and all said that they're now losing Fossil walk-in business because the company had begun selling watch online. This was right after the virus, and the online business had much fatter margins. When I heard fat margins, I began to talk to a few watch designers who said that Fossil's design team has much improved with new people. The stock at that point was very cheap, so I bought some. Big mistake. It is now down 80%. What was my mistake? Simply in thinking that the entrepreneur that had started the business, a pair of Greek immigrants, could also turn it around. I forgot that to turn the business around, the CEO must first turn around his or her own thinking, which is hard because the human brain is usually unable to accept facts that prove that its owner is the problem. How did this realization help me? In two ways. First was in PayPal, of which I told you a month or two ago. There, all the signs of a turnaround were in place. It ticked all the boxes, and also the box of management change. New management came from Intuit. The stock has been up since then. But it also prevented me from telling you too soon about Zoom, where everything points out to a turnaround, but there has been no change of management yet. So even though the turnaround in Zoom may well be in place, I'd have to sleuth it some more, and so would you, to be sure that management can stand up to its own brain and recognize it itself may have been part of the problem. I may tell you more about Zoom in the future. Third mistake, destination maternity. That was another error. The symbol was DEST, a company with a unique niche for clothing for expectant mothers. It was taken over by value investors who replaced management with people who know about the business. Here, most signs were positive, so I bought some. The problem was the competitor was Amazon, who eventually sold everything Destination sold with wider reach and cheaper prices. So Dest eventually went bust and is now trading pink sheet, I think, with a Q behind the stock symbol. The conclusion? Don't bet on pretty small gazelles competing with a gorilla. The gorilla will always win. Fourth mistake. This was a double error. Political betting. My record has been 1 win against 2 losses. In 2016, Iowa Futures betting site of the University of Iowa gave you $1 if Trump wins, and it cost you 16 cents. So 1 to 6 in 2 months. So I called New York City, where Wall Street broker I knew, a fervent Democrat, was organizing a speech of money raising by a Hillary's family member a few weeks before the election. Now, he said that the price of entry was $5,000, but they only sold half the tickets. So he cut the price to $3,000, still no takers. Then some people called and said, keep the money, but take my name off the list. Why? Apparently, they all knew Hillary would very likely lose. I didn't want to be ostracized by the new president. The New York Times didn't tell you that. Personal phone call and sleuthing did. But just to be sure, I called a few more contacts in other states who seemed to know this also. Again, the paper didn't tell you. So I upped my bet. And in October, I had my 4-year class reunion in the Stanford GSB, and then I made a few more bets. Everyone was for Hillary based on polling. I was neutral. I'm a Canadian, so for me it was a simple bet. I don't care who wins. I bet and won. 4 lunches and 1 bragging right, all of which went to my head. Because in 2020, I called my contacts to see whether I should be bet on Trump again. This time my contacts seemed to be afraid to talk to me. Why? They didn't say. So what to do? Very lazily, I went to the model that was wrong only once before. Since 1912, the candidate with the biggest support of his party always won, except in 1960, when JFK won against Nixon with the allegedly help of St. Giancana, the Chicago mobsters who allegedly cooked the vote for him. Good odds. Be wrong only once in a century. So I bet on Trump. Big mistake. He lost. Whether there was similar crookery in 2020 is debatable, but the fact is I lost. Why? I didn't do the sleuthing, and I bet on a mathematical model. It's not the same thing at all. This time, the error was my ego and laziness. By the way, a surefire I was walking into a trap was that I bet small, which by itself should have warned me, and I was not sure. Still, I lost, and I thought I'd be wiser next time. I wasn't. In 2024, this year, a few months ago, I lost again. This time, I called friends in several states who make their living knowing which way things are going. It's like calling Wall Street analysts. And you can see where I'm going. Several said it would be likely 269, 269, because the game of the so-called deep state, according to them, was to prevent either Kamala or Trump from winning. Both were too bad for the other side. So I bet on this and even told you about it. But again, I bet small, which again should have warned me. See below for the final investment error that talks about it. What's the conclusion? First, there's no substitute for personal, on-the-spot sleuthing. Not mathematical models, not logic, just rude, real, physical reality that you check yourself, not others. The other conclusion? Don't listen to me on political bets. Or if you do your own sleuthing, which you should do anyway, as you do for stocks, as I mentioned. Fifth mistake, Argentina. In 1982, when Argentina was in the pits of corruption and inflation, like today, the main telecom company, Telecom Argentina, symbol TEO, TEO, was selling for about 50 cents. The EV to EBITDA was 0.5, when the regular ratio should be 5 or 10. A giveaway, seemingly, or was it? So I called a former classmate in Buenos Aires, and I called the local newspaper business reporter, talked to two. Then, the another contact, I talked to the Canadian commercial attaché in Buenos Aires and learned that TEO was a gem. It was a wonderful company, it was a national franchise, cannot be replaced, just the price was cheap because the country was mired in corruption. So I bought a moderate number of shares at about 75 cents. The stock was already higher from the bottom and sold after a year and a half for $2 and change, a three-bagger, congratulating myself on successful sleuthing. So what was the mistake? I was an idiot. The stock after I sold went to 15, 3.5 years later, or 20-bagger plus, which I missed for a mere triple. What did it teach me? Two things. First, don't sell too soon if you know more than others do. Because if you do the work and you really think you know what you're doing, trust yourself and don't rush to sell. Before you sell, check it and sleuth it again. But second, if you are really and truly sure, bet big. How big? As big as your heart will allow you on the border of fear. In fact, if your heart tells you the bet you are betting is too big, then you probably haven't done the deep sleuthing yet, and the buy is potentially half a gamble. When you are really, really sure, your conviction is rock solid, and the investment is possibly not a gamble anymore. And how did this hard-found knowledge help me? This is how. 3.5 years ago, when I saw Argentinian stocks again selling for peanuts for the same reason, corruption and inflation, I did even better sleuthing, as I told you, and I bet big, on the border of fear. It worked well, as you can see from the numbers. So when do I sell? This one I have to leave for your own sleuthing. You can't just rely on what other people tell you. Sixth mistake, size. A small size of the investment being a major error is not just my view. Both Warren Buffett and Stan Druckenmiller say so. Buffett famously said his biggest error often was sucking his thumb, as he calls it, instead of buying big when he was really sure. And Stan Druckenmiller, Soros' former partner, said the same. In fact, he said that Soros was such a big buyer that sometimes when he thought it's a big opportunity, often he bet on margins, sometimes double his capital. Now, Druckenmiller was recently interviewed by a Norwegian banker, and that's exactly what he said. Look it up on the internet. It's a wonderful interview with a lot of little tidbits. But how can you know when to up your bet and by how much? The simple answer is your conviction will tell you. How to get a conviction? The only way I know to get it is by physical investigations, which 99% of investors never do. Most stay glued to the screen or the newspaper and invest based only on blips on screen and ink on paper. Most so-called investors totally ignore that a company is a real, physical, breathing entity that should be sleuthed. So if you turn off the screen, put on your gumshoes, and go out sleuthing, you likely take their money 5 times out of 6. Or to the 6th time, well, you'll still make the occasional mistake, like I do and have and will. But if you occasionally go over the mistake like what I'm doing now, and write down what you learned, in future, you'll make fewer mistakes at the price of some present shame. But your shame will dissipate. The money will remain. And what's best, the occasional multi-bagger will pay for your mistakes in spades, hopefully. That's all for now. Please let me know in the comment below what you think of the above, and if you like it, subscribe to the channel and forward it to all your subscribers and friends who they subscribe to. Then buy my books, The Sleuth Investor and The Advanced Sleuth Investor, so you can learn the methods I use to try and take the money of all those market players who haven't read my books. I'll see you next time, and meantime, thank you very much for watching.